In a span of 8 years, what has Dollarama done that made it accelerate its growth over time? That's what you'll see today. Eight years ago, Medici started a new investment in a company that many people already know today, which is called Dollarama, based in Montreal. So it's a retailer, and 8 years ago, they had a great success in Canada, but what we were seeing at that time was the company was going to mature over a few years, and then the growth should start to decelerate as they get, as many stores as they can in Canada. And so we valued the company that way at that time. But now that we still own the stock, we see that the management has done something quite amazing over time, because we have to remind ourselves that retailers, a retailer network, as it grows, the maturity goes on, and the growth starts to decelerate. What Dollarama has done, what the management has done, is they pursued new ventures outside of Canada, and at the same time, they did really quite a nice job in Canada. And the fact that they kept growing in Canada is quite amazing, because a few years ago, Dollarama would sell $1, $2, $3 product, and then as they added new items at $4 and $5 price point, they were able to kind of change the value proposition, where a customers 10 years ago would come at a Dollarama to get some cheap knockoffs, and then this customer today is going into a Dollarama just as he goes into a convenience store. So it's like it's a neighborhood store where you could buy all your everyday need at a good price. And so that value proposition changing in Canada allowed the management to open much more stores than they would have originally expected. But the other thing they've done during that time is their expansion in Latin America. They went into Colombia, Peru, Guatemala, and Salvador, and they had quite a nice success. Just to give you a rough idea, 8 years ago, they were pretty small there, and they multiplied by 6 times the amount of stores as of today. And by the same time frame, their profits in that venture has been multiplied by 30 times. So that's quite amazing. That's a huge success. And they did it with a management that really knows the market well there, and that has just copied or take the same business plan as the core business in Canada. What they're doing today, they're coming with a new expansion in Mexico. But keep in mind that Mexico has more combined population than the other countries where they are already in. So Guatemala, Peru, Colombia, and Salvador. And so the growth potential in Mexico, where they are just starting today, is really nice. And the other lever of expansion that nobody came to see is the acquisition closed today of the Reject Shop in Australia. So Australia is an economy that's that shows many similarities with Canada. And so yes, it's on the other end of the world, but in Australia there's no national store network of a concept that's similar to a Dollarama. So once they acquire that network, just as they've done today, the land is green, and they can go on and pursue growth in that country. And so today, when we look at Dollarama, we don't see the retailer, the Canadian-based retailer, that's going to mature in a few years out at 2,000 stores. We see an international retailer with quite a good value proposition, and that's probably going to 4,000 to 5,000 stores. And so as the growth potential has been enhanced over those years, we have seen a much better intrinsic value for that investment. Now the stock is not cheap, certainly, but those businesses that can execute well, generate a good return on capital, and go into great new ventures, they tend to be valued that way. And so as investors, we got to wait for better opportunities when the stock would pull back to just, you know, buy more shares of the company. And so right now that's a hold for us. And so if you have any question about Dollarama, don't hesitate, shoot us an email or anything, and we'll be happy to answer your questions. Thank you.